It's our sector of the day. We thought we'd take a look at the broader buy now, pay later sector, given there's a bit of news around there at the moment. In fact, it is circling the drain today with US regulators looking to crack the whip on the sector to protect consumers. The Consumer Financial Protection Bureau out of Washington saying it's concerned about accumulating debt, regulatory arbitrage and data harvesting. And Afterpay responding by saying it welcomes efforts to ensure there's appropriate regulatory protections for consumers. It's also merging with Block, of course, that's a consideration. Shares down substantially, some 38% year to date, as we've seen from around September. BNPL today is a sea of red. In fact, just looking at the latest numbers there, both the Zip and Afterpay down well over 7%. Also interestingly today too, there's some speculation that Zip may be eyeing a merger with its US rival Sezzle, although it's not commenting on that. So a lot to consider in the sector. Jun Bei, what are your considerations?
Look, this sector is going through pretty tough times. The regulatory announcement, of the regulatory review in the US is not a surprise because we've seen it in every other country. This sector has grown, well, as the initial inventor, which is the Afterpay, has grown from nothing to now an incredible part of the digital payment system ecosystem. Not only just in Australia, it's actually in the US and around the world, and it's gathering so much momentum. You've got the large payment system, the payment companies such as the credit card companies, the PayPals, and so everyone is moving into space. Just means that it is attracting regulatory attention. And in Australia, we went through this review 3 years ago, and then came through with continue to monitor. But as it matures, we will have more regulations coming in just to ensure the healthy development of the sector. So look, it's not a surprise, but certainly things will get a little bit tougher as we go forward. Competition is picking up in this space as well as we talk to all these new large players going in. And I think one big theme in the next 12 months is consolidation. We're already seeing consolidation. Afterpay has been taken out by Square, and we'll see more mergers. Most of these businesses won't exist as the way it is in the next 12 months, simply because the sector needs to consolidate to really become the bigger the better. And then you need to continue to spend and grow and capture all that addressable market. So it requires a lot of money going to space and attracting a lot of attention. So my view is that it's too volatile at this point. You really need to watch and see, but there will be more mergers and acquisition taking place with the listed players.
Okay, so too volatile at the moment. But if you're already in there, Jun Bei, do you hold where you are?
Look, if you're already in there, I think you will still be a little bit more cautious. You probably a hold instead of a sell, and you want to stick to the large players. Don't go small because smaller players do not have any competitive advantage in a world where it's rapidly consolidating and the competition increasing.
All right, Adam, your thoughts, as Jun Bei said there, consolidation expected as we go into the new year. What are your thoughts?
Well, Jun Bei is always eloquent, as always. So, look, I think she's said pretty much everything that I need to say. But, look, I wanted to wrap some numbers around what these guys are basically talking about at the moment. And the thing is that the US transaction, or so the transactions in the US market for the buy now, pay later sector is going to equal around about $55 billion for this year. Now, that's a lot of money. And estimates are saying that is going to rise to $74 billion next year. So this is certainly a sector that is going to continue to go. Afterpay has a total of 28,000 merchants on their books. Now, that's up from 3,800 a year ago. Sorry, 2 years ago now. So, look, huge growth in that sector, and I think definitely they need to have some transparency. But the key thing, and I think what the US regulators are going to be talking about, is that 53 million adults in the US lack traditional credit scores. So, in other words, 53 million people can't really get a credit card, can't really get a home loan, can't really get any kind of access to credit. And then obviously they're seeing them taking up the buy now, pay later sector. And that's really where I think the regulators need to step in. Certainly that is going to be a sore point for them because they don't want these people that don't have the ability to get these kinds of credit or don't have the access to it is to get into more debt and then puts more strain on the system. So I think that regulatory is going to do well for them. certainly, if anything, I would definitely be holding her. I prefer Zip over all of them due to the fact that Zip has a higher regulatory hurdle to get an account versus something like an Afterpay. So Zip is my pick in that sector.
Interesting. All right. And if you're not there already, Adam, is now the time to get in, or are you just biding your time?
I think Zip, there's a good support level at $3.80. So if you're not in there, look for that support level, $3.80. I think it should do well when it hits there and potentially have a bit of a bounce. So yeah, that's would be my level for entry onto Zip.
Good one. All right. That is a summary of the buy now, pay later sector.